Good morning and welcome to OptionsTender. It is Friday. Happy Friday, everybody. January 3rd, 2025. I had to pause there for 2025. It's not 2024 anymore. So this is our first Friday of the year. So have a great weekend, you guys. I'm going to go through SPX just to show all the new viewers here what our setup is. And then we'll go on multiple time frames on SPY, and we're going to go through around the horn on QQQ, SMH, IWM, DIA, and the VIX on the daily time frame. I want to make sure that when we get down to the 65, also that you see exactly how I'm playing this. So there is a setup for the bulls. We are traders. We trade both sides. I want you to know how I'm playing this. I'm still short the market, but we're going to have to watch out for a possible run to new highs. And I'm not switching my point of view, but there's always two ways to trade. And I need to show that risk to the upside and the risk to the downside, both in this video. So make sure you stick around and pay attention to the great information that's there. And play this at 1.25 or 1.5 speed so you can get all this information, all the videos as soon as possible, so you can watch multiple videos in a shorter period of time. Okay, so let's just go ahead and jump into this. We are doing this video 11:37 a.m. Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube 99-cent supporter. It also comes with the Discord, so and the trade alerts are in the Discord, so you get tons and tons of value for only 99 cents a month. All right, let's jump into it. We have SPX on the monthly time frame. This is a 2029 top, 2000 top, and we're forming the 2024 top. So far, the top is in December 2024, so we'll maintain this setup here right now. We have the 2008 top aligned with the 24 and in confluence with 2024 top here. I said 2024, I meant 2021 going into 22 here. So this is where we're getting our first rejection off of here. Do we go and touch? That's what we're trying to answer today. Do we go and touch one more time a little bit higher there? Or do we just descend from this point? Let's go down to the weekly. Go over to SPY. And the reason why I use SPY, I do chart ES, SPX, and SPY, but most people trade SPY, so I try to use this more often. I think SPX is a lot more valuable because of it's a cash index, and there's no dividend skew or contract change in the futures, for example. So. Okay, so here's what we're looking at. This is going to be the first time that we're looking at this point of view. So we're getting a touch on the 20-week moving average. It's such an important moving average. That's why we had our hedges on today going into a Friday, a possible free Friday, which that's what happened. We're getting the reaction off of that 20 moving average here. We are underneath the 8 EMA, so I wouldn't say this is all in clear. It's a possible reversal candle, but we're still underneath. We have to get above this 8 EMA and hold above, and that is going to be the theme on almost all time frames. So if we do break down from this 20 moving average, that's going to be very bearish, and likely we'll get a back test of it, calling it the kiss of death. So that's what we're kind of looking for, but we need to respect the fact that we're getting a possible reversal reaction off of there. So the natural spot, if we continue to the downside, the first spot here would be this 5.6. We're calling it 560. Okay, it's a full range from 555 to 565. All right, full range there, and we'll look at that a little bit closer. And the reason why this is such an important area, you see the two tags off there where there are huge reactions off of there. The reason is because of this retracement from the 2021 to 22 correction here. You have a retracement that goes all the way through, and then once you get past the all-time highs, you have the retracements, the 127% retracement, which is the first primary. Got a reaction off of that, got above it, held, and so went to the next target. That's natural. These are our two primary targets on all time frames when you're looking at a correction. And so 162 reached it, huge move off of there, and that was the yen carry trade. And then another tag there with a big reaction, but held on. If you notice the whole time, the 20-week moving average, each time we hit one of these major resistances, we came down to the 20. Even though we broke down underneath, quickly regained the 20 here, 20 here. And so we're looking at that same kind of price action there, but it's not going to hold forever. So we need to watch the risk for that. So we do have a time cluster here, relationship with time and price. So we'll see where price is when we get into this cluster. Will price be higher and then we look for shorts, or will price be lower and we look for calls, some longs? Let's move down to the daily. On the daily time frame, what we're looking at is a bearish rising wedge here. This is a traditional look at technical analysis. Okay, this is our very important level here around 560. And the reason why it's 555 is here's the lower end of this. I know that the exact spot was around 160, I want to say 163. But if you notice price action here, you have a range, 555 to 565. Here's the trading range where we're here for a very long time. The lower higher end. And then it played a crucial role when you held on top of there. Notice how much time it took to hold and consolidate that price action above here. And there's where price took off at that point. Okay, so it formed a wedge. We broke down from that wedge, back tested perfectly to that wedge, and now we're breaking down. So here's the worry. Here's the worry if you are a bull and a bear. I'll show both sides. So right now we're testing that 8 EMA, and we're going back to test the 50 moving average. Okay, we can trade around this price, this moving average, and price can get all the way up to the 20. That's very possible. And the reason is because there's still buyers. Okay, we haven't really formed a real market structure. Although we do have a low, a lower high, and a lower low, that could be just the start of a bearish trend. Now, if you're looking from a bull, you have a 3-wave move here. And we'll look at that in a lower time frame. And then you get lower high, and then a 5-wave possible move here. I don't think it is when we look on the lower time frame, but I would argue that that would be the 5-wave move. So you have an A, B, C correction, and we're looking for a new high here. That's a strong argument. You have some work to do. We're at the bottom here. We're in a consolidation area. You have the 50, and then you have the 20. So 20 simple moving average on the daily time frame is our trend indicator. So the trend so far for us, starting to curl down, it is down. Really have to get on top of this 20 to build up some argument that the price is going to go higher. But I do think this is somewhat of a I would call it some sort of flat pattern, or I'll wait till we get to the 65 to describe it. You can't see it as well here. So let's go. We're also looking at this being a possible head and shoulder, where the neckline is holding very strong here, held twice there and over here. So we know that this is a very important area. So if you do break down from here and hold, clearly we didn't hold here. We should see a quick movement down to our price targets around the 560 area. Let's go to the Qs and we'll come back around to SPY. All right, so you had this bearish rising wedge, held, broke down. Now we're fighting with that 8 EMA again. And guess what? the 20 moving average is right where the wedge is. So do we test that wedge there, the 20 moving average? I think it's possible. And again, I'll show you what kind of structure I think that may be happening here on the Qs as opposed to what's happening on SPY. This should be a little bit more clear. And again, this looks like an ABC. So even if you're, and we'll talk about this on the 65, even if you look at these as impulse wave, well, then that's a zigzag, 535. Okay, so now what we're going to look at is a 1, 2, 1, 2. So both of those are correct. It's just how it plays out, decides. So you have to watch price action. So bull or bear, you're going to get the same formation here. And we'll just see how it plays out. It's got to get above this 20 moving average and probably right above this trend line here, if not working its way sideways to get higher. SMH. So SMH is a good indicator to watch as well. Now we're getting into resistance here. We have this equilibrium. We're getting to this triangle apex, and this is going to break out. If it breaks out to the upside, then I believe these targets are much higher here. Okay, we have a bear flag, and that bear flag can simply be retested again. 563, maybe even higher, up here to the 573. So just looking quickly over here, I'm not going to go through all of the count or anything, but this could be just a larger corrective formation. This could be an A, a B, and then we're looking for a higher range here, 265, 274. So that's exactly that gap area that we were just talking about. So if this does break to the upside, that's what we're looking for. And if it rejects and starts breaking to the downside, then we have a much larger move there to go. So it's coiling up. We're looking for some spring action. We're looking for a break to the upside or downside. This is in an equilibrium. Bye, honey. So I'd stand by to my wife here. And then we'll look for a big move either way. So NVIDIA is going to be a good indicator on what happens with this here. Looks pretty strong at this time, but we are looking for another retracement in NVIDIA. Talking about a lot of that in the Discord, so jump in there. So ultimately, I do think the Qs get a little bit of a weakness, and I think the IWM has more to bounce. Okay, so I think those will kind of even each other out a little bit. And the reason is because the bonds. I think the bonds are forming a low. And in other words, rates are going to come down. That's going to affect eventually tech to the downside. And then small caps, it's going to give a little bit of a boost till it realizes that a recession is around the corner. Okay, so there's your bounce type area. Can we get to the 20 and the 50? I think the 50 is likely. Looks about 50 cents, about a 50% retracement or so, maybe even to the top of the range, around a 70% retracement. All right, and the same thing with DIA. We have this nice trend line here we're getting to the bottom of, and we had also a channel here that we broke down from. And now we're getting this positive divergence into support. I do think that price will at least at minimum get up here to the 433. So I see a little bit of bullishness here for a bounce in IWM and DIA for sure. Now, the big thing is how far do we bounce in tech? And therefore, with those factors in mind, SPY should be somewhere in the middle. Should it be dragged down from tech, or is it going to be dragged up from DIA and IWM along with whatever tech does? That's what we're keeping an eye on. And the VIX. The VIX had its breakout already. We had another move here after the breakout, we had a pullback into the 200 moving average. That's our very important area, and we're back testing that point again. The 20 moving average, the 200, we're getting right back to that range. And so I'm looking at Monday or Tuesday being a turnaround day again, to the upside for VIX and to the downside for SPY. So right away, let's go ahead and jump to SPY. And let's go ahead and look at the 65. And we'll go real quickly. I think we might just look at SPY and QQQ. So let's just jump into here. We didn't really get to any support areas. We were just really fighting with this 585. Super important area. So I'm keeping an eye on this. If we break down underneath 585 again, I think that we will get to our next targets there. So the question was, what are we seeing here? If this is a three-wave move, I think that's blatant. This is obvious. There is no 1 2 1 2. This is an A. We got a B triangle and then a C. Okay, so it's a three-wave, clear move. We had a bounce here, a back test of the bearish rising wedge. Now what? So what we're looking at now, if we look at in the structure closer, I believe we had our 5-wave move here. 1 2 3 4 and 5. And so what is this? I think this is a B wave correction and then a C here. So if you have an ABC in the middle of a move, that only leaves two options open here. That can't be the C wave of this ABC. So that takes out new highs. All right, let me reconnect here. Give me 1 sec. Okay, sorry, we are back. So on a traditional sense, what we talked about yesterday, despite these arrows, that was a more bearish just in case something happened here. I'm not looking for that. What we were talking about was the options expected move yesterday. We got back above there, and we had two options: breaking down from the 8 EMA or getting back to the possible starting range of the closing range from last week, closing this gap and ending up here. Okay, that would be natural for this move here. So we're expecting a big move here on a Friday into Monday. If we're bullish on Friday, then I expect a follow through on Monday. If we were bearish, I would expect a follow through down to the 565 area going into Monday and Tuesday. Okay, so we are clearly in the bullish scenario so far. I mean, anything could change at any time. So I think it's natural that we get up back to these ranges here. And what that says is, let's change boards so we can kind of get into the patterns of the Elliott wave. Now we have some time and price relationships coming into Monday and Tuesday. So that's our cluster there. I do expect a reaction. But what maybe could come out to the end of the day here, we could form some structure. This really looks just like a straight A shot here. So we could form, an A, B, C to get up to these ranges. But however this goes, it could go straight there. I'm not sure. But the whole point is, what I think's happening is we got our 1 in here. Okay, an ABC for a 1. I'm still looking for wave 2 to complete if it really wants to be bullish, if things get aggressive, if SMH starts breaking out to the upside, NVIDIA, if IWM, DIA are really kind of screaming to the upside, then I think this wave could be larger and wave 2 could end up somewhere up here where this is an A, an expanded B, and we get a large C. That would be expanded flat. Okay, but I'm still not convinced that that's the case. So that would be a larger correction. I'm looking at this being a 1 complete. We're into 2, and now we're into wave 3. And so being that this is wave 3, I'm looking at an ABC pattern, just like we had an ABC for 1. I'm looking at A, B, C all the way down, where C is going to be pretty darn aggressive, to that 565 range right here. So we'll be looking at these, those were placeholders. Again, I was looking at the very aggressive move. We will get a 5-wave move in here after the B wave is done. So again, let's dig in closer here. So this first move here, we saw our 5-wave move, and now we got that would be an A, B, flat pattern, C, into a larger degree A. So that's our A, just like this A here. Now we need to form a B. So is this B going to be, it can be anything. It can be a flat pattern, it can be a triangle, it can be whatever. So we're not going to play around with this B. We already had our fabulous hedges to the upside. So if price by the end of the day goes lower, I will add on some hedges again, because I don't think this move is over. I think it's going to play out as a triangle, a flat pattern, anything that might retrace to the 50, 60% here. And let this play out. I want this to play out and a continuation form to the downside. So I'm not going to play this really small degree move here. Okay. So we got our A. We're looking for B to complete into possibly Tuesday. And then we'll look for a 5-wave impulse move down much lower. Okay. Into our range, our target range. So now that we discussed the bearish part, what we're looking at for the bulls is this. Because we had bullish divergence right here, you had a low, and then you had a lower low on price, but you had a higher low both here and here on the indicators. This is what has to kind of worry the bears here, but there's plenty of room for this to play out much lower. Okay, so I've seen it 100 times. This downside action form a divergence, and then it just burns through the divergence lower. Okay, see, this can get much lower. If the price action is a wave 3, like we're talking about, it will burn through the divergence. Period. All right, so what we're looking for is this correction to happen with more time than price for B, and then we're looking for C to play out. But if you're a bull, what you're looking for is this being an A, 3-wave move for a B, and you're counting this somehow as a 5-wave move to complete a C. Okay, and now what you're looking for is to build market structure. You want to hold on top of this 585. Whether you're a bull or bear, this 585 is such an important spot here. You're back above it. You can be bullish. No big deal. This is that's what makes a market. Be bullish here. And then if this fails, get out of your bullish position. Simple as that. Okay, so it's got to hold this 585. It might trade around a little bit, but ultimately it has to hold this 585. Then you can look for a larger move to the upside. All right, so there's no structure to the upside in the 65-minute time frame yet. No bullish structure. This is all bearish. At this point, you have bearish market structure. Lower highs, lower lows. In order to negate that, you're probably going to form some sort of equilibrium, a triangulation, but you're going to form a 1, 2 setup into wave 3, 4, and so on. Okay, so that's what we'll be looking for. Even as a bear, that's what we'll be looking for. All right, if we start getting lower today, in that's not an ABC to me. So if we start getting lower into the day, this Friday, then we'll probably put on some very early dated, like Tuesday calls, just to protect what we have. Our positions are very bearish, so why not protect your account? All right, that's the bullish aspect, and then we'll probably get into those targets that we were talking about way earlier, back in early December there. So as for now, the bears continue to hold the ball. And that will look like, so you got that A. If you see in the red, first of all, in the yellow is the 1, 2, but in the red are the A, B, C's. So that's 1, 2, and then A, B, and then C down to their target area, which will end up with a 5-wave move in this move. So I will put those, I'll move those over. And then we'll look for some sort of correction. And I'm not going to harp on this. I don't know how big that wave 4 is. This going to be an expanding type play? Do we get a deep wave B here? And then we start forming a trend line, and then wave 4 be really deep as well to bounce off those trend lines. This could be an expanding leading diagonal. Okay, that's what happened in 2000. All the other corrections or the beginning of recessions were much more aggressive, where price got more steep to the downside in shallow bounces. Okay, so we'll talk about the rest of the move later, but ultimately I think we get down here to test the lows of this bearish rising wedge. So what that look like in the Qs? And the Qs, again, we're not going to go through, we'll just look at it in a traditional sense here. We broke down from this trend line here, or you can call it a channel, broke down from it and formed a 3-wave move so far. Okay, that could be corrective, but this is much more impulsive. So I think this is an impulse 1, 5-wave move down, ABC, and then a 5-wave move down. The only other way, if this is not a 1, 2, 1, 2, which I think it is, and then we should get the Qs to come back up here to, again, the expected move, the middle of the expected move where the week closed. That would give us a nice doji, and then that would be the back test of this traditional trend line, and that would give us a 1, 2, 1, 2. That would be very natural, where you get, I guess we'll look over here, where you get a, pull it down here, you get a 50-60% retracement. If you consider this a impulse wave down here, I think this looks more like a some sort of flat here, an ABC there, where this is the impulse 1, 2, 3, 4, 5. You get a 1, and then an A, B, and then you get the expanding flat here for a C. So this could actually argued to be the bottom of one here, and the retracement will be somewhere in this area. So I think that'll make more sense. You come back to the 50% retracement. That's the 521, 522 zone. And there it is. I mean, that's right smack there, right in the 522 area. So I think this is where our target should end up. And then continuation down there. But if you are a bull, again, you're looking for, and I don't think we actually have positive divergence in this. Hey, you do have the RSI. No, it looks good. So we have positive divergence here. All right, and here. And this is playing out. So if you're a bull, then you want to see some market structure start. You have an A, B, C correction. That has to be 5-wave impulse move there. I don't think it looks like that. But either way, this could be a 1, 2, 3, 4, and then a running flat for a 5. And what we need is some sort of structure here. We have nothing. It's just a straight up move. So we need to form a higher low and continue on to the upside, okay? And I think that could happen. We'll add some call hedges if price comes down into Monday or the rest of the day or so. Maybe close the gap, holds there, and goes for just a little bit higher of a move. That would be an ABC correction. Then we'll hedge into that and turn those hedges into more puts at that point for us. So we have a downtrend line. We'll be taking a look at that downtrend. If we start to break this downtrend, then hey, we got something else going on, and the bulls may grab the ball back. All right, so that's what I have for you guys. Hope this helps. Thanks for watching here. Don't forget to like and subscribe, and we'll see you in the next video.